Here's a detailed summary of Zscaler's Q4 fiscal year 2025 earnings call transcript, focusing on key financial metrics, forecasts, risks, and management statements, suitable for reading aloud. Zscaler Q4 fiscal year 2025 earnings call summary. Welcome to the summary of Zscaler's fourth quarter fiscal year 2025 earnings call. Today, we'll walk through the company's strong financial performance, future outlook, and strategic initiatives. Key financial metrics and performance. Zscaler delivered an outstanding fourth quarter, exceeding their guidance with revenue growth of 21% year-over-year, reaching $719 million. For the full fiscal year 2025, total revenue stood at $2.7 billion, a 23% year-over-year increase. A significant milestone was achieved as annual recurring revenue, ARR, surpassed $3 billion, marking a 22% year-over-year increase. Zscaler highlighted that they are one of only two pure-play SaaS security vendors to reach this level. Gross margin for the quarter was 79.3%. While this is a slight decrease from the prior year's 81.1%, it was attributed to a one-time deployment for a government customer involving a hardware component with a lower gross margin. Management expects gross margins to return to their target of 80% in Q1. Operating margin reached an impressive 22.1%, exceeding their long-term range and showing a year-over-year increase of approximately 60 basis points. This demonstrates significant operating leverage, with operating margin expanding by over 1,000 basis points since Q1 2023. Free cash flow margin for Q4 was 24%, with data center CapEx at 8% of revenue. For the full fiscal year 2025, free cash flow margin was a strong 27%, positioning Zscaler at the Rule of 50. Remaining performance obligations, RPO, grew approximately 31% year-over-year to $5.8 billion, with about 46% classified as current RPO. Customer growth. Zscaler ended fiscal year 2025 with over 9,400 customers, including 664 customers generating over $1 million in ARR, and 3,494 customers exceeding $100,000 in ARR. They now serve nearly 40% of the Global 2000 and over 45% of Fortune 500 companies. Management's forecasts for future quarters. Fiscal year 2026 guidance. For the first quarter of fiscal 2026, Zscaler expects revenue between $772 million and $774 million, representing approximately 23% year-over-year growth. Gross margins of approximately 80%. Operating profit in the range of $166 million to $168 million. Earnings per share between 85 cents and 86 cents. For the full fiscal year 2026, the guidance includes ARR in the range of $3.676 billion to $3.698 billion, reflecting 21.9% to 22.7% year-over-year growth. Revenue in the range of $3.265 billion to $3.284 billion, representing approximately 22% to 23% year-over-year growth. Operating profit in the range of $728 million to $736 million. Earnings per share between $3.64 and $3.68. Free cash flow margin expected to be approximately 26% to 26.5%. Management indicated they will invest aggressively to position for long-term growth and profitability, given the large market opportunity and increasing platform adoption. Significant risk factors. While not explicitly detailed as risks in the transcript, the following points highlight areas of potential caution or strategic focus. Gross margin nuances. The introduction of new products and hardware components can temporarily impact gross margins, requiring ongoing optimization as products scale. Macroeconomic environment. While management assumes a relatively unchanged macro environment for fiscal 2026, any significant shifts could impact growth. Acquisition integration. The successful integration of Red Canary and its technology into Zscaler's platform and go-to-market strategy is crucial for realizing its full potential. Competition. The cybersecurity market is dynamic, and Zscaler faces competition across various segments. Customer adoption of new technologies. The pace of adoption for emerging areas like AI security and data security, while strong, is subject to customer readiness and investment cycles. Highlights. Exceeded Q4 guidance, strong revenue growth and operating margin performance. $3 billion ARR milestone, a significant achievement in the pure-play SaaS security space. Rule of 50, achieved, demonstrating a strong balance of growth and profitability. Platform innovations, significant focus and demand in AI security, zero trust everywhere, and data security everywhere. AI security, driven by rapid growth in AI or ML traffic and emerging security challenges. New offerings like AI Guard are seeing significant customer interest. Zero trust everywhere, exceeding expectations, with over 350 enterprises already adopting this comprehensive approach, nearing their fiscal 2026 goal. The Zero Trust branch solution is a key driver, replacing legacy firewalls and SD-WAN. Data security everywhere. ARR grew to approximately $425 million, with customers consolidating multiple data security point products onto Zscaler's platform. Z-Flex program generated over $100 million in TCV bookings in Q4, showing over 50% sequential growth and becoming a preferred motion for strategic multi-year deals. Red Canary acquisition successfully closed, adding approximately $83 million in ARR at close, and expected to contribute $95 million in ARR for fiscal 2026. Lowlights. Slight gross margin decrease. A temporary dip in gross margin attributed to a specific hardware deployment, though expected to rebound. Shift in focus metric, moving from billings to ARR as the primary growth metric, requiring investors to adjust their modeling perspective. Most important statements from the CEO, Jay Chaudhry, and CFO, Kevin Rubin. CEO Jay Chaudhry. We had an outstanding Q4, and I am very pleased to share our strong growth which once again exceeded our guidance. We are seeing significant customer interest in our powerful AI security solutions, including our new AI Guard and Gen AI security offerings. Our annual recurring revenue, or ARR, increased about 22% year-over-year and surpassed $3 billion, making us one of the only two pure-play SaaS security vendors to achieve this milestone. Heading into fiscal 2026, we are accelerating our platform innovations across three growth factors: AI security, zero trust everywhere, and data security everywhere, which together surpassed $1 billion in ARR in Q4. On Zero Trust branch, customers are leaning into our vision of a cafe-like branch by eliminating north-south firewalls and SD-WANs. On AI security, we have entered an era of omnipresent AI, which is fundamentally transforming enterprises and is leading to an explosive growth of AI/ML traffic. On Z-Flex, our Z-Flex program is becoming the preferred motion for strategic multi-year deals as it enables seamless adoption of new product modules by our customers. With the accelerating pace of zero trust and AI innovation, we're still in the early innings of disrupting a large $100 billion security market. CFO Kevin Rubin. Our Q4 results represent a strong finish to fiscal 2025, reinforcing the demand for our solutions and our operational scale. We ended fiscal 2025 with over $3 billion in ARR, a milestone that reflects approximately 22% year-over-year growth. Our gross margin was 79.3%, compared to 81.1% from last fiscal year Q4. We expect gross margin to move back up to 80% in Q1. Our operating margin was 22.1%, exceeding our long-term range and growing by approximately 60 basis points year-over-year. For fiscal 2026, we are shifting our focus from billings to full-year ARR as our primary growth metric. We are assuming the macro environment to be relatively unchanged in fiscal 2026. Regarding Red Canary contribution, we are assuming low double-digit growth in the Red Canary business for 26. We are taking a prudent approach to how we're treating their ARR. There is no fundamental shift in guidance philosophy. I think we have historically been prudent with how we set our guidance, and I expect to continue that. This concludes the summary of Zscaler's Q4 fiscal year 2025 earnings call.